All right, welcome back to the channel for our third installment of our technical analysis on Bitcoin. And we have, in the first video, looked at the basics of identifying swing lows and swing highs. We looked at Fibonacci internal retracements and Fibonacci extension targets. In our second portion of the video, we went much deeper in to our Bitcoin chart, and we looked at our Elliott wave patterns, and then again use that in conjunction with our internal and external targets to go ahead and map out Bitcoin. And then we also went a little deeper on what is called an expanded Elliott wave flat correction, which is an advanced pattern. Now, that being said, if you haven't checked out those videos, I highly recommend and go back and do those, as this has given us our chart that we see here. It's very complicated, and if you're not familiar with what we're doing here, or you're not doing this along with us, you may be lost. So go ahead and check those out, and then come back to this video later, and we can see the much more detailed potential targets to the upside and to the downside. That being said, if you are new to the channel, make sure to like and subscribe. And we also do not only static videos, but stream 3 times a week. In those streams, we answer all kinds of questions, look at not only cryptocurrencies and Bitcoin, but also our traditional assets and commodities as well. Now, that being said, remember that none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So that being said, if you're picking up off of our previous video, we know we now have a macro 1, a 2 retracement, a 3, a 4 retracement, and then a 5. And now we're looking at a complex Elliott wave a complex Elliott wave expanded flat correction. And now we're essentially looking for our retracement of our 5. So we have completed our 5th wave right here. And what we're looking for is roughly, we've already come down below the 382. So our next target to the downside is going to be the 0.5, which actually lines up perfectly with typically what you're looking for, 50% retracement of that wave with our expanded Elliott wave flat. So now when we get down here to our target, which is $14,000, we also see some direct correlation with the previous high right here. And then also, if we switch over just for a moment here to our monthly chart, so it's not going to be as clear, but if we look at that same level, that 14,000 level, the 0.5 and our target, we see that was actually the highest monthly close from our 2017 high. And then we actually had a pushback up and topped at that level in 2019 on our initial move out of the bear market. So we see some clear confluence as we have a macro monthly high right here and then open, and we never put in a new high. Then we see a wick up to that same level as well. And then we finally break through that level and we go parabolic. So if we do get down to that level, roughly what we're looking at is our 0.5 retracement, which is actually our target to the downside. So we're going to go ahead and put a blue box there, as that is our completed target and essentially like our key buy zone that we're looking to take place. So we're going to turn that one blue, and that is going to be the completion of our internal retracement of wave 5. And that would be the completion, obviously, of the expanded flat correction. Now, that being said, once we put in the completion of a 5 and an internal retracement, what happens next is we don't do what we previously did on wave 1 and wave 3. On wave 1, we correct 30% of the way and then continue to the upside. On wave 3, we correct exactly 38.2% of the way and then we continue to the upside. But now what happens is we have our initial correction, which is already to the 382 and overshot, but we're expecting deeper to the 0.5, around 14,000. But what actually happens on the 5th wave is, instead of just correcting the 5th wave from 3,000 to 64,000, we actually correct the entire 5-wave structure. So in this case, basically Bitcoin's entire life cycle, from 0 all the way up to what was the high at $70,000. And what we're looking for now is this macro blue fib. So we drew it all the way from the bottom at basically 0, all the way up to the top at 70,000. And then here we see we have a 236 in blue right here. And that is actually the most shallow or the most bullish initial retrace that we would expect if this is in fact the case and we are retracing the entire 5-wave structure. So we're going to put a target down here for that macro 236. We're going to switch that one green, and then we'll look at that level and we'll actually talk about the psychology behind this. So in this case, we would actually be coming down to a very, very deep retrace of $5,700 and roughly $38. Now, that being said, of course, people do not believe this is possible, but they also didn't believe it was possible to ever go below 20,000. So that's the exact psychology of this is everyone gets very comfortable with the internal retracements and then doesn't realize suddenly that instead of retracing a 1 or a 3 or a 5, we're actually retracing the entire 5-wave structure. So once that takes place, the initial move down and the most bullish retrace that we could possibly have, the 236, is roughly $5,738. Now we don't have to get there. That could easily be wrong, and we could start moving back to the upside, and we can invalidate what we're looking at right here. But assuming we're right and we do eventually come down to that level, at that point in time, psychologically, crypto or Bitcoin would be broken, and people would assume that it is dead, it has failed, and something different has happened now. So they're naturally going to become bearish at lows, which is the last thing you want to do. But once we look at that 236 initial retracement, what would we expect to happen? Say that we're correct and this does actually happen. Let's just put our target right here, the previous all-time high, 70,000. And then we're going to say, okay, we have a very aggressive move down here, a gross retracement all the way down to the 236. The next thing we would do is actually start moving back to the upside, and then we would actually likely go lower. So I know this is not what most people want to hear or believe, but it is actually most likely the scenario that will play out, and it will catch a lot of people off guard, and it will also present, for those of us that are aware of it or looking for it or anticipating it, or just looking at the probability or possibility of it happening, it will give us some of the best buying opportunities essentially like possible. So that being said, assuming we get the initial move down to the 236, the next thing that would take place is we would have a bearish move down to the 236, then a bullish retracement internally, followed by continuation of the bear trend. And this will really shake out anyone that's left. The majority of people would be shaken out already by this point in time, but if we have a very, very deep retrace, which in this case would be our macro 382, that's actually $1,284 Bitcoin. And most people don't believe that it's ever possible to go to $5,000 or $6,000, let alone all the way down here to, basically $1,200 or $1,300. But not only is it possible, it's actually very probable based on Elliott wave theory. So that being said, we have our target down here. Now, how do we figure out where our B is going to go, assuming that we're right? Well, once again, we're going to take our Fibonacci tool. We're going to go from the top of our macro peak right here at 70,000. And in this case, this is our macro A that we're looking at. So we're going to draw down to that level, and then we're going to look at our internal Fibonacci retracements. So we have a bearish move down. I'm going to go ahead and change the color on this one to red. So we have a bearish move all the way down to the macro 236, and then we actually have a bullish move after that. All of a sudden, people will start FOMOing back in, thinking that we're bullishly moving to the upside. We initially need to see at minimum bullish retrace back to the 236, at which point in time we would look for our 382, which is our most shallow retrace, and that would be roughly 14,555. We have our 0.5, which would be our average or Charles Dow 50% retracement, which would take us right back to around 20K, which is where we're at now. Or potentially we could have a very deep retrace, and in this case it's a bear move down, and then it's a deep bullish retrace before continuation to the downside. That could take us actually back all the way up to 26,600. Now that being said, again, this is going to give us a very broad range, but if we look at, once again, our potential top somewhere in between the 382 and the 618, we're going to look for how price action reacts along those levels. So again, that's a very broad range, a very large range that we have to obviously pay attention to, but we're going to look for signs of topping at those various levels. And then once we did get all the way back up there, the next thing that would happen is our very, very deep retrace down to the 382. Now, it is possible that we actually see a much deeper retrace, and we could actually come all the way back down to the 0.5 or even the 618, and this would still be viable. Now, do I think that's going to happen? I really don't. Our 0.5 macro retrace would be $373. I don't think Bitcoin will ever get there. And then the real deepest possible retrace before continuation would be the macro 618, which is actually $110. Again, I don't think that that's viable, but it is important that we pay attention to that as a possibility. But for right now, we're going to focus on the likelihood, probability, or realistic possibility. But if we start to get down to those crazy levels, we can pay more attention to it then, and we can, essentially pay attention either riding shorts lower and then looking to take profits at potential bottoms, or we can just look for, buying opportunities. And again, this would be the absolute best area to enter, assuming Bitcoin is still bullish and we're going to the upside. So now once we have completed our macro 1, 2 internal retracement, our macro 3, our 4 internal retracement, and then our macro 5, and then we have our expanded wave, Elliott wave flat, we come down and form our A, and then we get the B retracement, and then we get the C retracement of the macro. Now, all we've really done is we've just started our 5-wave structure all over again. So now we're going to take our 5-wave, we're going to go all the way back down to Bitcoin's beginning life cycle. We're going to look at its low to high right here, and then we're actually going to look at its high to low retracement, and that's going to be our 2 right here. And then I'm actually just going to slap these on here, and we're just going to kind of zoom out and take a look at what's happening. So now we have our macro 1. I'm going to switch this green because it is going to be a bullish move to the upside. And I know things may have gotten a little scary there, may have looked a little bearish, and you start thinking, this guy's crazy, no way we go that low. But I think you'll find that actually my technical analysis is very, very advanced and very effective. And the likelihood of this playing out is actually very likely and definitely a probability above 0. So that being said, once we have put in our macro 1, which was our entire 5-wave structure to the upside, we put in our macro 2, which is our ABC correction to the downside, all the way down to basically 1200, which is, our bullish retrace for the macro 5 waves or Bitcoin's entire life cycle. Now we're looking, where is the 3 going to be for our next big leg up? And this is where we can get really, really bullish. So we're obviously projecting targets way out into the future. So we're going to have to adjust these in real time, but we have key areas we're looking for. Obviously, the first area is 5,600. After that, we're looking for this 382 at roughly 1,200. And then we can pay attention if we go deeper than that. But let's just assume that this was the peak of our 5-wave structure right here, which we know it is according to Elliott wave. And then let's just assume we come down to the 382. And then from that 382, we actually see continuation. We eventually take out 70,000, and then we start moving up to all-time highs. Where can we look for those all-time highs to take place? Well, let's just look at what we had previously happen. So we know from our top of the 1 right here to the bottom of the 2, we had a fib extension target to the 2.382, and that's where we topped out. And then from the top of the 3 to the bottom of the 4, we had our fib extension target to roughly the 1.618, and that was our next top. So we have a 2.382 and a 1.618. We don't know where this is going to take us, but if we take that tool and go from our high to our potential low right here, and then we look to where we can place our 3 at, all we're going to do is just zoom out here, and we're going to look for those same levels. So the 1.618, that seems like a viable potential target to the upside. And in this case, the 1.618 is going to give us a target of $796,474. So if that is the case, and we are correct on this analysis, we're talking about potentially buying Bitcoin around $1,277 or roughly $1,300. And then we're talking about a move from $1,300 to potentially, $790,000. So the macro move here is obviously massive. And this would present, a phenomenal buying opportunity for anyone that is able to capture this move. As essentially we can use our drawing tool and we can say from that low that we're potentially expecting to the high that we're potentially expecting, we can see a 63,000% move to the upside. So if you put $1 in Bitcoin, you would have roughly $63,000 at the top of the next cycle. And what is the top of the next cycle? Well, it's just another 5 waves to the upside followed by, an ABC correction. And then that is our 1 and our 2 retracement. And then this is our next 5 waves to the upside. And that is our 3. And then we would expect a 4 retracement. And then we'll do a 5 as well. So in this case, where would we expect the 4 to go? Well, we know for a fact that the deepest retrace we would want to see, assuming that $700,000 target to the upside, we know the deepest retrace we would want is once we put in the top of the 1 and then the 2, and then we complete the 3 to the upside. We know the 4 cannot retrace deeper than the top of the 1 by more than a wick in highly leveraged markets on long time frames. So on a daily, weekly, or monthly, we don't ever want to come back below 70,000 again. So let's just assume that we are correct and 70,000 ends up being our bottom. And then after that, we actually end up moving back to the upside. Well, let's look actually at from our 2 to 3 right here, or our wave 3 macro. Let's look at where that internal retracement would be. So once again, we're going to go from the bottom of that low to the top of the high for our macro 3. And then again, we're just going to switch this over. We'll make this blue again. So then we're going to look at what are our internal retracements. The 236 is when we can validate that the peak is possibly in for that like 700 or 800,000 level. And then we know that typically our shallow retrace would be the 382. And actually, if we go any deeper than that, we would be invalidating our Fibonacci's. So we'll just assume that that's actually going to hold as support. We're going to get a shallow retrace around that area, and then we're going to continue to the upside. So then once again, how do we predict our target for our wave 5? And again, sometimes I get called very bullish on crypto, but you have to understand, I've been in the space for a very long time. I have been, in the markets, trading and doing technical analysis in various levels for over 20 plus years. So I am quite experienced in these markets and quite educated on these various areas of technical analysis. So that being said, it may look like we're bearish, calling for a potential target of $6,000 or $1,000 to the downside, but also we're calling for very bullish targets of 700, 800,000 for our next, basically cycle. And then finally, from the retrace of the 3 to our potential downside target, the 382, we could Fibonacci extension our next upside target. And then we're just going to flip this one green this time. And we know, again, we could potentially see a target of the 1.618 like we initially saw, or maybe a 2.382. So if we have the 1.618 as our macro target for the completion of our 5, that's going to give us actually $3,805,189 Bitcoin. Now, if we did have something crazy happen and we came all the way up to the 2.382, we're talking about, basically Bitcoin becoming the world reserve currency and $24 million targets. Now, does that seem likely now? No, it does not. But we're talking about essentially the initial one of our macro pattern took over 12 years to play out, and we're still in the process of the retracement. So we would expect the same thing to happen for the 3. So we're talking about predicting into the future now, close to 30, and 50 years from inception. So again, there's marginal errors can make an extremely large difference on the macro, but just our minimum 1.618 target giving us over a $3,752,218 Bitcoin would essentially be obviously life-changing money. And that shows that Bitcoin has succeeded and is potentially, world reserve currency or an extremely, extremely powerful asset in the future. Does that have to be the case? Of course not. We don't need for this to happen. But again, when we look at the macro picture and we really zoom out and see what's actually taking place right here, we can see very clearly, that we essentially have that initial 5 waves up broken down into 5 waves, and that's our 1, then our 2 retracement. Then we have another, 5 waves up, and that's broken down into our 3, and then we have another retracement, and then we have another 5 waves up, and that's broken down into our 5, and then we would have a potential another retracement. And then the next thing we would expect to happen is, just like we did after we completed the first 5, we would essentially look for potential completion of those 5 waves. So from our bottom right here, and I'm just going to slap that on for a second, and then we're going to look higher. So we would essentially be looking at from that bottom right here to the top of the 3, and then back down, and then up to our next target. So now we're actually going to push this macro target all the way up here to the top of the 5, and that would just be our next. Oh no, we did the 3 already. I'm sorry. So we would be looking at all the way from the bottom of the whole entire life cycle of Bitcoin. My apologies. Sometimes I confuse myself with these ridiculous targets. So we would actually go all the way from the bottom, and then we would look at the initial 1 wave up, the 2 retracement, and then next our 3 wave up to the 700,000 area, and then our 4 retracement, and then our 5th wave up to, what amounts to multi-million-dollar Bitcoin, and basically like, hey, Bitcoin won, so you better be a part of it. And then at that point in time, we would look for, once again, a macro retrace all the way back down to the 236, somewhere around 130,000, and then potentially our shallow retrace of the 382 around 16,000. And then the cycle just starts all over again. So that being said, what type of time frames are we looking at this? Well, again, we're projecting very far out into the future, but what we can look at is the past. So we know that if Bitcoin was basically, $0 in 2010 or 2011, and then this period essentially ran from, let's say, just for simplicity's sake, we'll just go by this chart, say from 2011 till 2021 top, that was 10 years up. and then we see a retracement period taking place for a few years after that. So then the next thing we would assume is, roughly another 10 years up. So we don't know exactly how long this is going to take place for, but the best way we can do that is using time cycle analysis. So that being said, we're going to go ahead and wrap this video up here, and then we're going to do one final video on how we're going to project these targets and potential time into the future. Time cycle analysis is by far the most difficult and least reliable form of technical analysis, but it does not mean that there's no value in it. So if you found any value in today's video, please make sure to like, subscribe, share this video with your friends as well. And obviously, if you haven't checked out the previous videos, you may want to go back and look at those. Even if you have, you may want to go back as well. But now you know how I draw an extremely detailed Bitcoin chart, and I'm able to get these extremely accurate targets, not only for internal retracements, but for external targets or Fibonacci extension targets as well. Couple all that not only with our Elliott wave, our Fibonacci retracements and projections into the future, but now we're going to get into time cycle analysis in our next video as well. So make sure to like and subscribe. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And that's it for today's video. Crypto Trend Trader, and I'm out of here.